Okay, good day to all. We are going to continue our discussion on partnership formation and distribution of profits and loss. This will be our part 2, no? Distribution, okay, of profit and loss. Okay, this will be our topic. This is the second part of my video presentation on partnership accounting. Well, okay, because this is just a continuation of the first part, I just prepared somehow, no, a problem para mas madali ko pong ma-impart. So the problem here is about two partners. Okay, hindi ko po sinabi whether it is a company or it's a natural person. So you can assume it as a natural person or a business entity. Well, anyways, whether it is a natural person or a business entity forming a partnership, we will have the same treatment pa rin naman, no? B and C form a partnership. Okay, let us assume that B and C are natural persons or a business entities, no? B entity or C entity that form partnership. They combined their assets. So each partner has a respective assets and liabilities. Ito po yung mga assets and liabilities ng bawat partner. Okay, we have cash, accounts receivable, fixed assets, accounts payable, and a capital of for each, which is 700 and 820. However, during the formation of the partnership, the partners agreed that 20% of the accounts receivable, okay, each, no, from B and C will be written off, meaning ibig sabihin i-recognize natin siya. Then 10% of the fixed asset shall be appreciated. Ibig sabihin po, iaangat po natin yung value ng fixed asset. Okay? So, and then at the end of the year, the partnership earned an income of 250,000. Okay. So we have three requirements here, no, for us to the problem provided us three requirements. Una, prepare journal entries to adjust the balances of each respective books, and then prepare journal entries to open the account balances of the newly formed partnership, and then at the end of the year, we are required to prepare the journal entries to distribute the net income, assuming the allocation was based on three different assumptions: equal allocation, beginning capital balances, and a ratio of 2:3. So, let us begin with the first requirement. Sabi dyan that the first requirement that let us prepare, no, a journal entries to adjust the balances of each respective books. Madalas po itong mangyari that before the formation of the partnership, partners agree to adjust their accounts before opening the balances of the newly formed partnership. In this case, kasi dalawa lang naman ang pwedeng adjust and the rest ay hindi naman kasi ito lang ang napag-agrihan. This is a very simple lang naman, no? All you need to do is to adjust, no? So ibig sabihin, if B and C has 150 and 40,000 accounts receivable and 20% of which shall be written off, okay, for letter B, and then we have letter C, then we have 150,000, right, for letter B, and then we have 40,000 for letter C. Okay, so 40,000 hindi 400. 40,000. Sabi daw doon, 20% of each balances shall be written off. So, magkano ang 40% ng 20? Okay, that is 8,000. And then, magkano yung bala ng for letter B, that is 30,000. So, ibig sabihin, to adjust the balance of B and C, ganito lang po yung gagawin natin for the first na dapat i-adjust. Simply, gawin po natin, sabihin natin that kasi this is a doubtful account, this is subject to written off, no? Yung written off, immediately i-effect po natin agad siya sa capital account kasi para immediately doon po talaga papasok yung adjustment. Kasi yung target po natin sa adjustment dito is baguhin yung capital balances din. Okay? So in this case, kasi there will be a write-off of 30,000 on B's accounts receivable, our entry would be B capital. Doon po natin i-charge yung 30,000 na adjustment, and then kasi write-off to, we need to deduct accounts receivable. Babawasan po natin yung account receivable ng 30,000. That's it. Yun po yung adjusting entry natin to adjust the accounts receivable of B. And how about on C? O, ganun rin. C capital for 8,000, ayun, 8,000, and then accounts receivable on C's book, okay, of around, okay, 8,000 din. Okay, ganon. Ganon lang siya kadali. Okay, lahat po ng adjustments, bawas at dagdag sa isang account, i-charge po natin sa capital account. Okay, no? Nangyayari lang po to, no, in the formation of partnership. How about on the second adjustment? Sabi naman sa second adjustment, okay, ano ang sabi sa second adjustment? Okay, the second adjustment, okay, balikan po natin sa taas. Ano po yung sinasabi on the second adjustment? The second adjustment says that 10% of fixed assets shall be appreciated, and each books B and C meron pong 400 and 500 na balances. Okay, take note ha, 400. Si B may, at si C may 400. Okay, and meron din siyang 500. Sabi sa kanya, sabi, dagdagan po daw ng 10%. So, computin natin yung 10% ng bawat accounts. Okay, sige. That is 500 multiplied by 10%. That is how much? That's 50,000. Same with 400 multiplied by 10%. That is 40,000. Because this is an increase on the asset. Okay, so we need to debit fixed asset. Okay, for B, which is 40,000, and then ang sabi ko kanina, any adjustments shall be charged against the capital balance. So that would be fixed assets, and then B capital, dadagdagan po natin ng 40,000, and we have on C fixed asset of 50,000, and then credit to C capital for 50,000. Sir, those adjustments ba, ano po ba effect nun? Well, prior to the formation, the effect would be, ito po ang mangyayari, okay ha? Magbabago po ang mga balanse ng bawat accounts. Okay, kopyahin ko po ito silang lahat at okay, at magiging magkano kaya ang pagbabago on the balances of each accounts after adjustments made. Okay, ito yan, no? Dahil ito, prior to adjustments, okay, prior to adjustments, ito yung mga balanse ng accounts. After the adjustments, ano kaya ang mangyayari? Okay, so after the adjustments, okay, kopyahin ko ulit siya para ma-compare natin. Okay, ayun, after the adjustments, okay, ang mangyayari doon, okay, is i-effect po natin yung mga adjustments ha. For the accounts receivable, that is 150, di ba? Okay, for B, ano pong nangyari sa accounts receivable? Babawasan daw ng, okay, sa taas tayo, babawasan ng 30,000, ito yon, babawasan ng 30,000, so we need to deduct 30,000. Ayun, ito yon kasi credit. So that is magiging 120. And how about on the capital balances? Mangyayaring 670 yan. Bakit naging 670? From 700, nabawasin din po yan ng 30,000. Okay, look, 70, babawasan po natin ng 30. Tama? 30. Ayun, nasa taas. Okay, 30,000. So, magiging 670. How about on accounts receivable of C? Ganun rin, 40. Babawasan din natin ng 8,000 kasi yun yung adjustments. 8,000. So, mangyayari po, magiging 812 na lang. Okay, yung C capital, or simply 820 minus the 8,000 na adjustment, 812. And then the second adjustment that we prepared is pertaining to the fixed asset. Yung 400,000 na meron tayo on B, dadagdagan daw natin ng 40, so lalabas 440. Then yung 670, dadagdagan rin natin ng 40,000. So yun yung bagong capital balance natin. How about on C capital, or C fixed asset? We have 500 prior to adjustments, dadagdagan natin ng 50. Okay, so naging 550 po yun. How about on the capital? We have, ayun, no, 820 minus 8 plus, kasi dadagdagan po natin ng capital na C, 50,000 pesos. Ayun. At lalabas 862,000 yung capital. Ito na po yung pagbabasihan natin para gawa ng entry on the second requirement. Okay? The assumption in this problem, lahat po ng accounts payable inassume ng company. That is our assumption. So the second requirement to prepare the opening balances. Okay, ito ang gagawin natin with the debit cash, we credit accounts receivable, okay, we debit fixed assets, okay, and then we credit accounts payable. And obviously, because this is a partnership, we debit B capital, okay, and C capital. Dalawa po yung partners natin, kaya dalawa yung capital accounts. Okay? So for cash, immediately the sum of 300 plus 500, dun po natin babasihin sa adjusted, 300, so that is 800. For accounts receivable, we have 120 plus 32. Ayun. Ito na po ang opening balance natin, Fixed asset, we have 440 plus 550. And then for accounts payable, we have 150 plus 220. And then for the capital balances for B, we have 710. And then for C capital, we have 862. This will be our opening entry related to the newly formed partnership. Okay. And then the last requirement, we are required to prepare the distribution of the net income. Tanong, magkano yung net income natin? Sabi sa problem, the net income was, okay, balik po natin sa taas. The net income is 250, and it may be allocated by equal allocation based on beginning capital balances and based on a ratio of 2:3. So unahin po natin yung unang assumption, equal allocation. Ito madali ito, no? Pag sinabi pong equal allocation, if there are 250,000, let us divide the 250,000 based on the number of partners that we have. Considering that the number of partners that we have in this partnership, dalawa lang, so they will divide it equally. So let us divide it by 2. So each partner will receive 125,000 share of net income. So to prepare a journal entry, if it will be an equal allocation, very simple. Okay, we have debit, income and expense summary. Okay, dahil nasa income and expense summary naman yan, of around 250,000 because that's the net income. And then credit to B capital kasi papasok yan kay B capital na 250,000. 125 lang kasi yun lang yung share niya. 125,000. Then C capital for 125,000. Ganun lang kasimple. If we're going to allocate the 250,000 using equal allocation na agreement. How about, sir, if the agreement was based on the beginning capital balances, o if beginning capital balances, okay, yung agreement, madali lang. Take note, the balances, gamitin po natin yung nasa number 2. These are the beginning capital balances on the formation of the partnership. So, B capital, kopyahin ko lang ha guys, kopyahin ko siya. B capital and C capital, this is the beginning capital balances, okay? So, yun, that is the beginning capital balances. We have 710 and 800, okay? 710 and 862. So, how I'm going to allocate that using that beginning capital balances? So, obviously, we are going to prepare a ratio in this case. So, what is the total capital? Kunin natin yung total capital natin. Total capital, that is very simple. We need just to add 710 and 862. And from that, we can now prepare a ratio. Okay, ano po yung ratio natin? The ratio will be 710 over 1572. Okay, tinanggal ko lang po yung mga 0 ha. And then the ratio, ito na po yung ratio natin. And then for C capital, yung ratio natin would be 862 over 1572. Ayun. Ito po ang pagbabasihan natin to allocate the 250,000. So, to allocate the 250,000, okay, magkano kaya ang magpupunta kay B? Okay, B's share on net income, okay, would be, sabihin natin, 250 multiply the ratio na ginawa natin, that is 710 over 1572. Okay, ano nangyari at hindi siya gumana? Okay, palitan po natin yung C90 into 250,000. Okay, ayun, hindi pa rin gumagana. Okay, sabihin na lang natin 710 over 1572. Okay, that is yon, gumana na. Buti na lang. Okay, so ibig sabihin, the share of B on the net income of 250 is 112,913.49. How about on C? Okay, C's share. Okay, the share of C would be same pa rin na computation. We have 250. Okay, multiply the ratio na meron tayo, 862 over 1572. Ayun, we have 113, okay, 0.18, okay, paki-add po natin yung dalawa, that would be, sir, kulang. Bakit po nagkulang? Okay, no? Paano? 852 lang. Dapat 862. Ayun, no? Merong mali. Iyon na po. Okay, naitama ko na po yan. 250,000. So, how are we going to prepare an entry? Ganun rin naman yung entry natin, yung sa taas, kaso magbabago lang yung mga amounts on the share. Okay, so yung magiging share ni B would be 112,913, and then magiging share ni C will be 137,087 or 86.51. How about on the C na assumption, if meron pong arbitrary ratio na 2:3, or there is an allocation of 2:3 na ratio, 2:3 na ratio, yung sinasabing, okay, arbitrary ratio. Ratio of 2:3. Ganito lang po yung kasimple, letter B and letter C. 2 daw kay B, 3 kay C. I-add po natin 2 plus 3, that is 5. So, ibig sabihin, 2 over 5. Okay. Wag mo. That is 2 over, mamaya, i-format ko lang kasi nagiging date, no? I-format ko lang na huwag siyang magbago. Okay, ganon. That is 2 over 5. Okay, nagbago pa rin. Palitan lang natin. Okay. Okay, teka lang guys. Naghahang po laptop ko ngayon. Okay, ito siya. 2 over 5. 2 over 5. Ay, hindi talaga. Gawin ko na lang na ganito. 2 over 5 and 3 over 5. Yun na po yung ratio natin for B and C. Okay, using the arbitrary ratio of 2 is to 3. So, simply, 250,000. Okay, magkano kaya ang B's share? Ganito lang po yung kasimple. That would be 250. 250 multiplied by 2 over 5, or simply that is 40%, diba? That is 100,000. Okay. And then how about on C? Okay, sabihin natin 250,000. Okay. Magkano kaya ang C share? That would be 250, 3 over 5. That is 150. Ito ang share ni C. Okay. Ganun lang. And then our entry will be the same format. Kaso yung mag-iiba lang yung figures. Okay. So, that's it. We have... Okay, that would be 100,000 and 150,000. Okay, ganon lang po yun. Okay. Hopefully, naintindihan nyo po, okay, lahat ng pinagsusulat ko dito, okay, in relation to the formation and basic distribution of profit and loss on partnership. Okay, so, next time, we will proceed naman to same pa rin, no? Distribution of profit and loss na tayo, pero we will focus what if sir, before the distribution and the allocation, meron muna silang mga agreements. Okay, so we will continue and discuss that, okay, if there are agreements needed to be followed prior to the distribution of profit or loss. So hopefully you have able to understand, okay, how partnership is being formed, assuming that there are adjustments to be made prior to the opening of the new balances. To opening of the new opening of accounts of the newly formed partnership, and then the basic distribution of profit and loss. Thank you, and God bless everyone. Keep safe always. Bye bye.